Good evening, ladies and gentlemen. This is Clueless 8 Frank, approximately 8:10 p.m. on a snowy evening, early evening, I should say, here in the New Jersey, New York area on the waterfront. It's April, gotta check the date, April 2nd, 2018. This free webinar session will be recorded, uploaded to the Clueless 8 Trading YouTube channel. That's available for anyone out there in the online universe to view and to understand the realities of what goes on in the markets, not the fake news that's propagated around from all the different media outlets about the market and trying to find excuses why things happen and why they don't happen. At Clueless 8 Trading, we tell you the actual facts, and then we react to it, and then we make money, and sometimes we lose money, but we make more money than often then we lose money, and that's the name of the game. Full disclosure, this is purely for financial education and not for any solicitation or advice. So let's kick off. A couple of broad points I want to make. Don't want to ramble on tonight, so if I do ramble, feel free to tell me to shut up. Markets are, as I've always said, and now you keep on hearing that on the biggest financial media outlet, which is CNBC, and then you hear it on Bloomberg too. They finally somehow have come to the realization that markets have no memory from one day to another. Markets are completely machine dominated, what we call algorithmic high frequency trading, algo HFT, black boxes. Anybody who knows how to use a computer will probably know somebody who knows how to use a computer better, right? So that's exactly what black boxes are. They're extremely fast trading computers, which are run by hedge funds, some institutional houses, larger firms, and they basically play the market based on the instant reaction to what is going on. Okay, they are not about the long-term outlook. They are not about what the predictive analytics is, what's going to happen tomorrow or the day after, as I've shown repeatedly, hundreds of times, that when the signals get down to a level where it's extreme capitulation or panic, both emotional panic and technical panic, the markets tend to turn, as long as there is some semblance of some indicators which are telling us that something is about to happen. I'd like to remind everyone one very simple thing here, guys, okay? Because we're all in the same boat. I'm not working against you. I'm not trading against you. You're not trading against me. We're trading with each other. One of the biggest and the more philosophical or psychological points about trading is the fact that we know nothing. We don't. All right? The only thing that we can determine in the form of mathematical probability, in the form of visual technical charts that you see in front of you, and that's what I do, in between all the fundamental and the macro stuff that I basically know a lot about, because that's what I live and breathe, is the fact that I wake up in the morning saying, I really know nothing. And we have to react to situations as they come. We do not have to be monkeys on a hot tin roof and react to situations every 5 minutes, even though that is something that we do quite often in the form of day trading, whether to go long or short. I made a decision today, right or wrong. Most of the times I'm right. That's the reason why you guys are listening to me. I made a decision not to go short. It was on a short-term, on a 7-hour basis between our 8 hours that the markets open, was a wrong decision in the sense that the markets were down a lot, and the puts would have delivered some huge ROI or return on investment. But that's something anyone can do on their own. My charts are there for them to see where the levels break, where the arrows are, if one level breaks, where it's going to go down to, and stuff like that. So they can always do that on their own too. You don't always have to rely on me. But I chose on a personal decision not to go short today, but instead to scale in slowly but surely, slowly but surely, on buying and dollar cost averaging selective stocks and the indices, specifically the SPX and the SPYs. So that's my decision. So I don't get judged. The way I look at it, I don't judge myself. I don't really care about what other people judge me. I really don't. But I don't judge myself on a one-day basis. I judge myself on a multi-day basis as well as on a swing basis. Even though I do regret that I did not go heavy short earlier today, because there were signals there which said that if I went heavy short, that there would be a snapback, which did happen. We were down 700 and what, 40 points at one point, and we ended the day at 458. So if I were told people to go short at, let's say, when we were down 600, I know how traders are. They're not going to react fast enough, and before they know, they lost money because we were only down 458. So there would be a snapback of 150 plus points if I told people to go short at Dow Jones down 600, and they'd be like, WTF, right? What the you know what? So I rather look to see what will materialize over the next 24 to 48 hours, which generally 90+% of the time, and you all know that, have resulted in what we call in technical parlance reflex bounces or rallies, which are anywhere in the range of 200 to 400 plus points, which deliver huge profits, and you have to take them. We did that on Friday. We did that a couple of times last week. So when it comes down to algorithmic high frequency trading, and the charts reflect a lot of those inflection points where they are buyers and where they're sellers, what we call demand points, which are buy points, and sellers, what we call supply zones or supply points, the machines are going to move in between them. And that's why my charts are constructed to show that, regardless of the fact that there are outlying breakdowns, such as this, which I expected the market to bounce from 2609. It tried to, it failed. That's why you have a red line here, support. So the next support was right here with that arrow at 2600. Kind of sliced through it, tried to come back up, vacillated here around the 2590 level. You can see that in the form of that green candle, which was good for about 60 to 70 points on the Dow. Gave in, came back up strongly, gave in, came back up big time. Futures are up roughly about 10 right now. It doesn't mean we're going to have a huge up open. I actually don't want a huge up open. I want a flat to down open with a surge that starts somewhere around midday or late afternoon. That's where the big money's made, because we get a chance, which is one of the most important things, that when you get a fire sale and the markets are down 720, 30 points on what? Donald didn't do that crazy. Yeah, he's smashing Amazon. Of course he's smashing Amazon. He doesn't like Bezos. He doesn't like the fact that Washington Post reporters are digging up a lot of dirt. That's standard procedure. That happens in any democracy. It's called a free press. You don't have to like it. But, hey, eat it up. You know, we're not some sort of dictatorial Stalinist regime, you know, like North Korea or even Russia. Free press. Let them say what they want. He tweeted out against the fact that Mexico, okay, that they should stop sending, well, Mexico is a fact. It's a fact. It's a conduit for a lot of people coming in from Central America, Guatemala, Honduras, El Salvador, and stuff. Look at a map on Google, and they go through Mexico. So my quick question is, why the heck doesn't the Mexican army stop them as they are floating through their borders? I mean, to their country. So what? The Mexican army doesn't know how to stop them? Trust me, it's ridiculous stuff. Okay, so they should do a lot of stuff, but that doesn't mean that we should break down, that we should completely isolate and decimate the NAFTA negotiations, which have been going on in full blast. NAFTA negotiations are North American free trade agreements. NAFTA is basically Canada and Mexico. We have huge business relationships with the guys. All right? We are symbiotically, business-wise connected. So one of Donald's tweets was like, he'll basically shut down the NAFTA negotiation. That's all hyper talk. All right? Because one of the things that happened tonight that I watch very closely, when Peter Navarro, the hawk on the Trump team, as you all know, they asked him, "Are you going to go for a tit for tat retribution against China, against Mexico?" They asked him on CNBC. He said, "No, we're not interested in that. It's just a negotiation process that's going on, and it's going to work out." Maybe that's why the futures are up 10. Okay? Because every word that the big shots from the White House and DC mention will have an impact on the market. But our job, my job, is to analyze all that, process that, and at the same time, look at the technical charts that's in front of us, which, by the way, are the most crazy volatile. This is like going out on a Friday night with your buddies or with your girlfriend, your wife, and if you have a wife, she's probably going to yell at you the next morning and getting pissed drunk and doing stupid things. Okay, so that's what the markets are doing. So in between that, we have to determine what's going on. So if any members or traders who are looking for instant gratification, that every 15 minutes they're going to make money, ain't going to happen. It does happen, and I've shown that repeatedly. But if you're looking for days like today, where it's your job to basically set up swing trades, and swing trades doesn't have to be weeks and weeks. Could be 24 hours, 48 hours, 72 hours, going into the end of the week, going into next week. You have to basically, that's what the big results are delivered. Just the way it was delivered last week, a few times. That's the way it was delivered here, back on the 25th. That's how it was delivered here, back on the 27th. You're not talking years here. You're talking 2 days. That's why we call it 48 hours. Not the Eddie Murphy movie. This is frigging trading. Okay? And that's how it's going to be. That's how it's going to be delivered here today, a few days later. So what I'm going to focus on tonight, the finishing the broad points, China obviously was going to retaliate. What do you think they're going to do? Sit there? But they retaliated against pork and poultry and some soybeans and U.S. beef. They didn't retaliate on iPhones because way too many jobs in stake in China at Foxconn, where the iPhones are assembled. Not made, assembled. Some people like to say, iPhones are made in China. No, they're not made. Made is where you develop the technology, where once the assembly is complete, it comes back and the final tests are done. That's where it's made. So iPhones are made in the United States of America. Guys, just get that right in your head, okay? Aside from all the political garbage. So bottom line is, I'm not talking about Samsung or Samdung, right? My favorite term. Those are made in Korea. So dump your Samsung if you really want to call yourself American and buy an iPhone. And if you don't, then don't call yourself American. I'm dead serious, okay? I'm very, what's the word I'm looking for? Dogmatic about it? Yeah. iPhone is an American product. They pay taxes in America. If you want to use a Samsung because you think the screen's bigger and whatever it is, then you are, in my opinion, some people won't like it. And if this was social media, they'd be sending me hate mail. You are not American because you are basically worsening our budget deficit, our trade deficit, and you are not doing anything. You're creating a bunch of billionaires in Korea. Well, you could create a bunch of billionaires here. Does anyone know how many billionaires are created in emerging markets every year? It's a heck of a lot higher than the United States. Now, I know a lot of them are much harder working than us because we like to talk a lot but not work hard. But at the same time, if you really believe that the money should stay here with without cutting off all global trade and connections, then you need to buy American. And that means you need to buy an iPhone. It's simple. Think about it before you go to bed, okay? So, on that note, there was no real negative news today. So the market just dropped 700 points. Yeah, great. There's a lot of stuff that happens which have nothing to do with anything. And this is one of those things. The machines went berserk. They did what they needed to do. And now we're going to get into the technicals. Okay, so let's get into it. So this is a chart that I've been trading, a chart that is telling me what the markets can do or not do. And I'm trying to put in my 2 cents of what the high probability trade could be. So it's not that hard to understand. All right. So look at these shaded areas right there. You got these, I put it in nice, lovely, I didn't put it in blood red. I put it in light pink. How do you like that? Nice, huh? Okay. Pastel. So you got one pastel box here, one here, and one here. Do they look somewhat similar? Absolutely they do. You don't need to know anything about technicals, but just visual. Just focus your eyes on your screen and say, wow, they actually look pretty much the same. They're known as flash crashes. And a flash crash is exactly what it says. It's a flash crash. So what do you do on a flash crash? You try to read the tea leaves and try to figure out what will happen. Pattern symmetry is key in trading. And Dr. Steenbarger's video, which I'm going to repost tonight, and anybody who did not bother to listen to 40 minutes of that video is being completely stupid. Because it is so precise in the way you have to look at trading and investing that it's not even funny. If I have the patience, which I have very low patience, by the way, I'm very patient with trades and stuff, but listening to other people, oh boy. So I really admire you guys for listening to me. So I listen to Dr. Steenbarger in the car, on my desktop, on my iPhone. I've listened to many of his videos, but the one that I put out there for everyone to listen to, and do take the time to listen to it, because I can't force you guys to do anything. I'm not Putin. I can't force you. Listen to my speech, or I'm going to shoot you, or the North Korean dictator. But I highly suggest that you do, because it will help you guys. All right, and it's not boring. That's the part. It's to the point. So one of the things he talks about, and this gentleman has been coaching the best, world's finest traders for the last 40 years or 30 years. So give him some credit. And one of the things he talks about is pattern recognition. And pattern recognition is exactly what we're looking at right now. So let's look at this. So we had a huge drop here. Just by looking at it, I would say this was one of those, what happened to the pen? They won't give me the pen. How do you like that? Interesting. So I don't have a pen. Hold on. I'm trying to get the marker, but it won't give it to me. All right, fine. So I'm going to use this. So this one here, okay, I believe just by looking at it, you're talking about, well, we can figure it out. Probably like 400 plus points. And that wasn't like years ago. That was last week, the 23rd. What day was the 23rd? 23rd was last Monday. No, 23rd was not last Monday. Last Monday was the 26th. 23rd was a Friday. Okay? So the Friday before last Monday. How about that? Big flash crash. Big move up. Okay? Goes into the 27th, which was the last week. Tuesday. Market hits a top because that's the head. Because there's the head and shoulders pattern. Market's still in a bearish mode. Let's not forget it. But as traders, we try to capitalize in between the reflex bounces and the reversals that we see. We're not the type on CNBC to say, oh, the market's going to go back to their old highs, or stuff that you hear on Stock Twits and other forums. Oh, I'm really bullish. The market's going to its old highs. I don't care if the market goes back to its old highs. I really don't. I'm looking to capitalize on what's in front of me and then look at the bigger picture and see whether or not it's going to make some sense holding things longer term. Which I think it does make sense, but that's my gut feeling. Because I don't use a Samsung or Samsung as you call it. I use an iPhone. I believe in America. It's a fact. And I believe that American business is actually doing very well. So is global business. And we are. There's nothing dramatically wrong with our banks, which generally precede a recession or a large-scale bear market. Nothing's wrong with our banks. They have the highest capital ratios, reserves, and they're doing fine. Our interest rates are held in check, running at the 10-year bond, which I said weeks ago was not going to eclipse 3.2%, is currently at 2.732%. Our mortgage rates are still unbelievably cheap compared to the global interest rates. You can still get a mortgage out there for 4 to 5%. There is no major crisis on our high yield bond side, which is basically the first marker or the canary in the coal mine. If something is really going wrong with our credit markets, not happening. But we have a lot of these serious doubts and fears, and there is nothing to fear but fear itself. Who said that? Teddy Roosevelt? Somebody said that, right? Teddy Roosevelt said that, or that's what comes to my mind. All right? Now, somebody finally comes out and tells me that they don't see my screen. Thanks. So they're just listening to me. Now you see my screen. Right, Dano? Good. So you're so engrossed with what I'm talking about, you don't see my screen. Great. All right. So now you see my screen. Great. All right. That's fine. Now we're getting into it. This is what happens at markets go really nuts, even up or down. All right. Even when we're up 500 points, like there's nobody in the chat room, which is fine with me. I get more time to put out my content and do the right thing, do my job. And I put out something which might be somewhat incorrect. Like instead of 280 calls, I say 380 calls. Nobody corrects me. That's when I know, like nobody. The mood is such despair and apathy that nobody's even looking at it. Beauty. Those are the perfect setups. Believe me when I tell you. So anyway, so let's get into it right now. So the fear that's driving the market is causing one of the most important things I'll tell you, the sentiment indicator, which one of the simplest way of looking at it, like the CNN fear and greed index, went to 7. 7! Of course it went to 7. Even my terrific members are frozen. Somebody said they're in the foxhole. One of my most active and most profitable members is Fish Eyes. He said they're in the foxholes. I said, no, they're in the bunkers 10 feet deep to the point where the soldiers don't even come out and fight the enemy. They're just hunkered down there like, oh my God, I want this battle to end. Thank God our armed forces are not like that. You know, we would be basically getting swiped out and killed and dead and whatever. You know, think about it. Imagine retail traders became like the Marines. Holy crap, that's my worst nightmare. Because that's exactly what's going on. People are so deep in the bunkers, they don't even want to look at their screens. Or they don't want to even look at the tweets. They don't want to look at the charts. Nothing. It's fine with me. I'm doing my job. You do yours. So what's happening is that when the markets are falling 400 points and then bouncing hard, 300, pulling back a little bit, bouncing hard, 600, zero participation overall by retail traders, zero participation overall by retail traders. So they are, and let's say, I didn't do today, but other times I did, put out a short, for example, when a major break happened. They're not even on the short. They are certainly not in the long. It's a Greek tragedy. It is. And as my good friend Donald would like to say, so sad. So sad. You're not there on the quick scalp trade that will generate 200 to 300%. You're not here, which would generate far in excess of that on very small amounts of money. I ain't talking about 50 cents. Maybe $500, which can balloon up to 3,000. That's exactly what happens. But there is no participation whatsoever. I have very seldom in my career as a full-time trader since 2011. Before that, I was on the analytical end. I was on Wall Street. So I was trading part-time because I couldn't sit there and just trade. I wasn't a trader there. I was more on the analytical end, on the sales management end, the portfolio management end. So I couldn't just sit there, and just look in front of my 14 screens and just trade. I have very seldom seen so much apathy and despair. I can't change it. I'm just a mere mortal. Right? I'm a mere mortal. You guys have to change it within yourself. But to me, it's exciting. It's exciting because the lower the participation of the human retail trader, that includes many, many, many of you, the better off the markets are going to do. And every single time these things happen, you probably lost, let's say, for example, you lost 60% here. You could have made 300% here. Do the math. Let's say you lost 80% here. Let's take an extreme number. That's as good as saying I lost it all, right? And 300%, net, you would have made 220%. But no, you don't want to do that. Fine with me. Then we had this big drop here, which was close to the 500-point type of drops. We go into a chop shop range for a couple of days. In between, you could have made some money. But let's say you didn't make money. You just bought it at this big fat blue arrow. It only takes 3 days and then bang, bang, bang. So again, you lost 80% here. And you dollar cost average down a bit on these long tail reversals. So I keep on showing long tail. There you go. And then all of a sudden, the market goes berserk. So let's say you bought something here at 8. These are the actual facts of trading. for real traders. Okay? And it was down to 2. You dollar cost average down bunch of times. Small amounts of money. You don't have to go crazy. Your average cost right now is 4 or even 3, depending on how much you bought at this base level where we were holding 2,600. And bang, it goes. You sell it at 10. Do the math. That's 150% on your money. What business do you know that you can make 150% on your money in 1 week? Because all of you want to just think, oh, it's not working in 15 minutes, it didn't work in 1 day, so everything's going to hell in a handbasket, not looking at the charts, not looking at the tweets, like whatever, not looking at anything. Yet you could have made 150%. You could have made 300% here. Now for that, you have to be a little bit focused, right? Like you can't drive a car with your eyes closed. If you're swerving off and the big, huge tornado is in front of you, of course you're going to get whipsawed. You're going to pull up on the side of the road. You're going to fall into a ditch. You're going to wait for that storm to pass. You're going to move on. So my point is that if you decide to stay in the ditch, well, that's your prerogative. I don't have a choice. This is my living. You guys, many of you have a choice because you have another job. But think about it. With small amounts of money, what you earn in your job is your passive income, is your active income. That's what you get, right? They take your taxes, after your taxes and stuff. You got to make like, $200,000 and after that, they take 40% of it by the time your check comes to you. And the rest of and what you're doing with trading with your spare money, that's your passive income. That's your money that you would leave in the bank for 0.2% or 1% if you're lucky, that can generate 150% for you. So the same thing's happening now. Big drop. This is very similar to this. Let's look at this. Let's keep it simple. And now this. Now it could either go into a chop range that again is going to, basically make everybody's brain mush, which most of you guys and ladies and gentlemen, your brain is mush right now. I understand that. I'm not here to encourage it, but I do understand that. It's tough, but who said trading was easy? But if you don't buy these type of tactical lows, then you will never make these type of 300, 400, 500% type of moves. You'll never. What are you going to do? Just chase? Oh, it's a great day, I'm going to buy. Yeah, of course you can chase. Momentum trading is fine. But then right when it hits those levels that I pinpointed, right shoulder, which I'm going to look over again and explain it again, the head, left shoulder, right shoulder, it's going to hit that, and by that time it's over. I didn't expect the market to go down 700 points today. I expected a 200 point, roughly 100, maybe 200 point pullback. So the way I look at it, and it's up to you how you look at it, it's a gift. It's a gift because your P&L is in the red today, and you cost averaged here, you cost averaged here, and you cost averaged here. And as the market basically vacillates, maybe does this a little bit tomorrow and then goes like this, because it will. I can assure you it will. I say it with full 110% confidence because I have seen it happen over and over again, and the technicals are supporting it, because we're going to go through a few other charts that will show that that's a high probability of that happening. No guarantees, but a high probability of that happening. So when that happens, you're not going to make money, because you're so deep in the bunkers changing the dull diapers that you don't even get a chance to click and say, I'm going to buy that 60-cent UTX call, which will balloon up to $2. as it's done so many times. Or the Netflix call that went from 3 and change to $1 and change. No, you couldn't click that because your hands were too busy changing diapers. Your own. It's a very sad story, but that's just the way it works, okay? With human traders. No one's asking you to believe me. I'm not God. There's only one God, you know? I'm just basically telling you the way it happens, which I've shown repeatedly. Anyway, enough of that. So bottom line is that at this point, this is what it looks like. Now, I did put a big sign here saying, big notation here saying March 23rd, 2018 pattern symmetry. I did expect the markets to move from here, which was the last bottom back on the 24th. 24th or 25th. What day was this? Let me see here. 23rd, sorry, 23rd, right? I have the, I even highlighted those inflection points. These little inflection points are not there for like some sort of artistic design. They're there to tell you what the inflection points are. So I expected the inflection point to be here, but except in a thin market with Europe closed and such, which I was incorrect, by the way. Europe was closed today, and it gave in. And this is a straight line 90-degree move down. Just like here. Just like here. Not the first time. So now we are going to try to re-enter this range. There's going to be volatility. And by the time we get there, all said and done, I believe by the end of the week, we are going to land up somewhere around here. Because this is still a bearish head and shoulder. Here's your head at 26.33. Here's your left shoulder, right shoulder. Guess what they did? I didn't make these charts up right now just to tell everybody like I'm great, look what I did. These charts were shown. So when the market ran up like nuts, okay, it hit that right shoulder, and I did say, look at my tweets. Take down large profits. Keep the core positions with a few things, but take down large tactical profits. We were up 440 some points. We ended up 380 points or so on Friday. Seems like a long time ago, obviously, because you weren't there. So it hits the right shoulder. This is the purest part of technical analysis, and it pulls back, goes into a overnight, goes into a sideways trading range, and then at around look at the time at the bottom, right when the market opened, we decide to basically give in. This was like you say, gap down and just collapse. Now it's easy to see here because it's after the fact, and we're reviewing this at 8:48. Sorry, what time is it? Yeah, 8:48 in the evening. But whenever you get these type of moves down, it's just a natural technical fact that you're going to get a reflex bounce that is roughly 50%, which recovers roughly 50% of the drop. That's why I put the Fibonacci charts, which look like this. There you go. So let's say you don't give two hoots about technical analysis, but just freaking make money off this. We were here, we dropped here. 50% fib retracement level. This is not rocket science, guys. It's right there. Roughly around 25.95 on the E-minis. That's roughly around 2,600 on the S&P. Could put a little bit of money down here. Okay. And you could get a nice, decent 60, 70, 80% return on your money. You don't always have to get 200, 300%. Most of you don't even know what 300% return ROI looks like because you never did the trades. Some of you do. I know JB does. He's been there. Dano's done that a few times. It's sweet. Now, what happens on a psychological basis is when the fibs start moving, they move fast. I mean, really fast. Futures are up 10. I don't know what they're going to do in the morning. Europe's going to open up. They were closed today. They might be, drunk on the drinking over the weekend. Europeans do love to drink, right? So, and they might be pushing the wrong buttons. I don't know. But the fact is that generally when it starts moving, it moves fast. Now, what do traders do? Traders get hit on these type of drops. I got hit today too, but I kept on scaling down. I bought here, I bought here, I bought here. I bought literally the bottom, if that is the bottom. I believe short term, that is the bottom. So now, what traders are going to do is, let's say somebody bought the bottom. They will basically sell early. Biggest fundamental mistake of every single retail trader. Because they got hurt, they're like, oh my God, that's it. I'm getting up. I'm up a little bit. That's it. And what do they see? They see the same, they see the same SPX call, for example, that they bought at 4 or lower. Let's say they got a 1, cheap ones, go up to, let's say their average cost is 6. They will click to sell at 7. They'll see the same thing on that big momentum move, which could very well recover all of today's move in the next 48 hours. Telling you that right now. Why? Because it's happened so many times. And the technicals are suggesting it might happen again. So it'll go to 20. And you sit there and say, holy cow. Why didn't I hold it? That's because your brain is so mush that you can handle holding something as it's just flying like a rocket. And this has happened to the majority of you all the time. It's happened to me. If I have a larger position. If I have a smaller position, I'll let it ride. If you have a larger position, then fine. Take it at 7. Take it at 10 and get the heck out of Dodge. You made a lot of money. If you held at 20, you'd feel like you just won the lottery ticket in a huge way. That's why we call them lottos. Because this type of reversal is very possible. And it's going to happen fast. But only for people who bought and scaled in and bought. Facts, guys. Facts. Now, that's your Fibonacci retracement. You don't have to look at any of the chart. You just look at this and say, okay, I'm just going to follow the candles which way it goes. Now, these candles are not going to be constantly green, one on top of each other. Green, green, green. No, they're going to zigzag around. That's why we look at, bear with me. That's why we look at these charts, where each of the lines are drawn, where they might go. Each of these are downtrend lines. Every downtrend line it's going to hit, it's going to pause. It's not that hard. It really isn't. Now, if you want to be a swing trader, then you have to hold your nose. You're going to buy it at these levels. Cost average down. Already in, making money as the market swings up by the end of the day. And then you're going to, the market's going to go back to 2,600. So that's it. This is the pure active traders chart. Also for traders or swing traders, it's always there for them to review. But for active traders, this chart makes a lot of sense. Now, even if I don't tweet, because I made a personal decision, I wasn't going to necessarily short today, but take the alternative method of scaling down and buying cheaper and cheaper. You don't have to do that necessarily. Okay, so you can if the level breaks, you go do your shorts, buy whatever SPY puts you'd like. And that's a key point about my trading service. I'm giving you very specific precision charts with all the levels. If a level is breaking down or up, you can place your own trades based on the strikes that you're looking at on the option side. You don't have to wait for my alert. My book is pretty widespread. It works in a completely different fashion than you guys. So use your own style, using my charts, and make money. My good friend and one of the best tactical traders and a long-time advanced coaching student, Fish Eyes, and few other people do that. And you've seen their feedback. They're not bullshitting. They're telling you the truth. They don't necessarily have to rely on me exactly. The end game is I win pretty much all the time. But in the short term, like on a couple of hour basis or a 1 day basis, you can be the winner. So let's move on. Everyone okay with this chart? Yes? Okay, good. It's not that hard, trust me. Just train your eyes to look at it. This is not like some NASA, rocket ship algorithmic chart, like, when the booster rockets are going to fall off and what the thrust speed is and stuff like that. This is just a chart with a bunch of lines. Just follow them. They're downtrend lines. There are levels. These are patterns, head and shoulder patterns, where the market's going to hit and pull back, and that's pretty much it. And this is where we are right now, which reaches up almost 11 points. Then take a look at the daily. The daily was doing pretty okay till the first part of the day. It was just a little candle like this, and it started expanding. So that's where I said I'm the first one to admit, because I'm straight up that way, all right, that I should have shorted or at least put some hedges out. I made a mistake today on that front, because that was my decision, because this candle started expanding the minute it crossed below this green candle. So take it as good, solid technical training on your part. You say, that's it, I'm going short. All right, because the point is that once you go below this green candle, it becomes a bearish engulfing candle. You see that right there. This was Friday. And then this is what happened at the end of the day. A massive wick, like I said, looks like a Chinese firecracker, right? A bottlenose rocket or something you call it. You put it in the bottle, then you just light it. Light the fuse here. Boom. So if this hammer reversal holds, we're going to go back and test. And you see the levels. The downtrend line right there, 2663. If we break out of it, this is where the pattern completion comes into play, 2720, which I believe is a terrific tradable short, because that completes this pattern. There you go. Now, all us human traders have very little patience. We all like to think long term. We all act like monkeys on a hot tin roof on the short term. Yes or no? I know it's a yes. It's called hyperbolic discounting. We look at what's exactly in front of us, completely disregarding what's going to happen a week from now, or even 3 days from now, or 2 days from now. That's just the way it is. So how you control that hyperbolic discounting or monkey on a hot tin roof type of behavior, that's up to you to figure out. Okay? Because what you're doing is you will let go or not buy these tactical lows, and then completely miss out on a 300% return on your money. In my opinion, this is where we're going to go. Now, I could be dead wrong. So what? A man without an opinion is no man, right? I'm basing it on a high probability move based on what happened here of these complete climactic bottoms. This didn't go as low as 25.33, which is a good chance of happening, probably by early tomorrow. Who knows? But the fact is, one thing I've learned in this business for many years ago, if everybody's looking at the same levels, for that moment, the machines are not going to take it down to that level. Why should the machines reward you, or the market makers reward you on a short that everybody is crowded in? Think about it for a minute. Why should they reward you with a $5 put that goes to 30 today and then give you another 30 points tomorrow? Because everybody is crowded into one room. Now, how do I know everybody's crowded into one room? Because there are two aspects to being to market negative a negative positioning. One, nobody's buying, which is shown by the fear index at 7, with trend at 2.83, which is called capitulation selling, with the put call ratio well above 2. That's showing extreme negativity. So that's one aspect of it. Some people act on their negativity by putting out shorts, but most people act on their negativity by doing nothing, just selling and going into cash. Yes or no? The answer is yes. I'm not going to wait for answers. All right? So the bottom line is the negativity is so thick, it's not even funny. All right? But look at the pattern, what's in front of you. So if you're a little bit patient and you do what needs to be done, which is buy a little, cost average down as you pull back those 700 point type of things, then you will be the first one to be rewarded with these type of moves, which have a very high probability of happening. Not necessarily that big, but even up to here, to the 2660 level, you are talking about a move from the 2575 level that we reached of close to 100 points on the S&P. 100 points in the S&P, approximately. It's actually 90 points. Is 600 points, 600 to 700 points on the Dow. But every time that happens, very few people are on the boat. That's a fact, not a story. So on days like today, which is really what it comes down to in simple English, all right, is you need to scale in and set those trades up. The calls that you bought at 3, they're down to 1, they're down to 80 cents. You buy a little bit more, you buy a little bit more, you bring your costs down. End of the day, your P&L still red. Fine, have a nice glass of wine. Thank God that you're still alive. All right? Give some money to the veterans, the PTSD veterans out there. I saw a 60 Minutes program yesterday about this guy whose face was blown off, reconstructed. 5 years he was doing great, and then he just killed himself. One of our finest, bravest army guy. Great guy. It just killed me. I almost cried when I was watching it. Because I'm a big supporter of our veterans. And especially veterans with PTSD. So this the 60 Minutes program, you got to just watch it on demand. One of the professors at one of the military hospitals did a brain scan surgery, and he showed what the difference is between blast trauma victims who basically survived these huge blasts, bomb blasts, IEDs under the Humvees and stuff like that. The difference between that and the difference between a normal person like you and me who sit here, in luxury. We all live in luxury, trust me, okay? Doesn't matter how much you have compared to those boys out there and girls out there dying for us. The difference between their brain and our brain. Because when we get into a car accident, for example, we get these minor scars and a concussion. And these football players and basketball players and hockey players getting hit, getting paid $30 million a year, right? They get minor concussions. You can see the difference between somebody and somebody who is a blast survivor. who eventually goes into deep, deep depression and PTSD. And it just was amazing what the contrast was. It was a MRI scan. It just killed me when I watched that show, guys. What we do here, you think you're sad? You think that, it's hurting you? Freaking wake up, all right? Seriously. So just be grateful for what we have, and don't keep on missing out on every one of these huge moves that comes along our way. Donald's playing a hard game. I don't agree with him a lot of the things that he's doing. I agree with him on his overall format. 110%. Okay? I do. Futures are up 13 right now. So your brain, when it's scanned, when you're scared and you think the world is ending and you, and you can't be a trader, you want to quit, you want to cancel the service, you don't want to look at the charts, it's too, oh my God, it's so painful to look at the screen. Oh my God, look at my P&L. For a minute, just sit back and think like a Marine, like a warrior or a soldier who's out there, who's going through IED blasts, and most of them who don't have PTSD come back and are just such the strongest. In fact, I want every one of those frigging guys to be my traders, because I'm tired of I get exhausted trying to rock and lullaby babies. And I like all of you guys. That's why I'm telling you the fact. But the fear and the trepidation, the doubt and the complete silence and the non-buying and whatever at massive fire sale lows just makes me think, my God. That's why I say a couple of times in the chat room, feel like I'm talking to myself other than my good friend Dano and or Fish Eyes or whoever's in there. Real guys, okay? Real traders. Like, thank God our army and our armed forces are not like our frigging retail traders. Not only would we be dead, we'd be mush. All right? Seriously, guys, wake up a little bit. I don't care if it's a bull market or a bear market. I'm just showing you the tactical levels that you can trade. Okay? That you can make some substantial amounts of money. And then just do what you need to do with it. Provide for your family. Make your families proud. Or if you don't have a family, make your partner, your other half, proud. Make your dog proud. Make your cat proud. All right? So anyway, so that's my pitch. I'm dead serious, guys. All right? Watch that 60-minute show. It really hit me hard because I'm very involved with this New York group called Headstrong, which is run by an ex-Marine, Lieutenant Colonel, actually. Okay? I'm telling you. Your brain on the worst day in the market, down 700, is still active. It's still alive. All right? Use it. Don't just sit there like you got hit by an IED in the middle of goddamn Kirkuk in Iraq. Put in some money in there. No, I don't have any money. Okay. You don't have any money? Fine. You can put in $100, $200. You can buy the QQQ calls at 20 cents. Or the puts for that matter. When I get people to buy those puts at $1 and they go to 8, 9, 10. Please, guys, think about it for a minute. What you guys are doing to yourself. Constantly missing tactical pullbacks. Even though I'm the first one to admit I was wrong today. I wasn't wrong. I made a sole decision not to do any major shorts today. You guys could have. But you make money here. You don't make money there. Where are you going to make money? There are no perfect moments. They're just technical moves between ranges and hitting the downtrend line, sell-offs, hitting the downtrend line. And who knows? We might get up there, up to that 2,900 level again. Don't listen to the bozos on CNBC and Fox News and the Fox, the Fox Money News or whatever, Money Matters and things like that. They have no idea what the reality of the markets are. They're just fumbling around trying to look pretty. Pretty boys and pretty girls. Yes, they bring in some fine people who make some great comments once in a while, and I always remind you guys on that. But these charts alone can guide you through that. So let's look at more charts here. Look at this. Who can trade this? Now, by the time that people get excited, generally speaking, is right around here, just from a visual standpoint. We crash and burn, we go like this, we create a beautiful inverse head and shoulder with a hammer reversal right there off the 25.50 level. Yes, we could slip to 25.33, which was the low on February 9th. Fine. So we know that. So what? It's exactly going to go there? Like I said, a watch pot doesn't boil. So it's probably not going to go there because everybody's looking at it and crowded in the same room. So the machines are going to blast you the other way because they don't want to pay you for your puts and your short positions. The most recent memory of that was Friday, where we just kept on going and then bang, we went up 440 points. And just like now, when the markets are dropping, complete silence in the chat room, because that is the barometer for me of sentiment, partly. Okay? So the beauty is there is no excitement on the downside or the upside. I can't even tell you how exciting that is from a sentiment, contrarian trading standpoint. There is no excitement on the crash, which there shouldn't be excitement, right, if you're long. But there is no excitement on the massive rallies. Lovely. It's complete silence. It's like the panic room. Somebody just shut the door and you don't know how the heck to get out. Even if you want to be happy, you can't get out of the panic room. So, saying all that, most retail traders will start getting excited at these levels. And by that time, you'll have a little room to move if you do, or we're going to hit that fast and we're going to pull back. So the point of entry is not necessarily the exact bottom. But how about here? How about you can see that visually what's going on? I'm posting these charts all day long. That's where you need to place yourself so you could get the benefit. You could get the lottery ticket for this type of move. Futures are up 13 right now. Globex futures. Let's move on before I go any further. This is the NASDAQ. More complicated chart, but you can see what's going on. Massive downtrend channel. Right? NASDAQ's getting hit. Trump's, Donald's going after Bezos. Don't get political, but I think it's the stupidest thing ever to go after one particular U.S. business. But didn't matter. He went after Boeing months ago. He went after this company and that company. He went after drug companies, price control. Did anything happen? Not really. They all bounced back. So will Amazon. Amazon's based on its earnings and its merits. Amazon's created close to 600,000 jobs in the U.S. They are the largest employer in the United States. You know that? Close to 600,000 people. Did they kill the retail industry in some ways? Of course. But the retail industry in itself was bloated. I mean, I'm talking about brick and mortar stores. Why should they? It's called capitalism. Survival of the fittest. If you can't survive, you are expected to die. That is called survival of the fittest. That's the essence of capitalism. Socialism, on the other hand, and communism, which I detest, says that everyone should have an equal right to do things, whether they're lazy, whether they want to work hard or no, doesn't matter. Everyone has an equal right to make money. No, they don't. Capitalism says people who fight, and of course there's an element of luck involved, who work hard, who have a better technology, who study their butts out when they're kids and not sit around, smoke pot, and hang around some delinquent, whatever. That's called capitalism. So Amazon and Google and Apple and every other great US corporation is a result of capitalism. Intellectual prowess, courage, knowledge, and the change of times. It's a change times. So constantly going after the same thing is, in my opinion, so stupid. And especially getting personal. And I know it's just ridiculous. When I read those tweets, I'm like, oh my God. U.S. Postal Service what is the U.S. Postal Service? It's nothing but a subsidized division of the U.S. government. A bloated institution where postal workers sit around on their little trucks, sleep half the day, don't deliver mail on time, and what they expect to get paid $200 an hour? They were actually, in my opinion, they were actually saved by the likes of Amazon and many other online shopping things, companies, which used them and paid them money. Dumb stuff. That's the dumb part of Donald. Okay, if you ask me. Now he doesn't like Bezos because of the Washington Post. That's a different story. It's a free country. You can say whatever you want on both sides. So let's move on. So here's your NASDAQ. And then the NASDAQ, either it's going to go here or it's going to hit the downtrend line, pull back. Whatever the case, this is what it looks like. Deep oversold. And you see what you see, right there. Here's your resistance level, whatever. Now, we don't trade the NASDAQ futures, as I like to remind people. We basically just use it as a proxy to see what the overall nature of the NASDAQ is. Now, the NASDAQ is techs and biotechs. Biotechs were getting hit hard today. Techs were getting hit hard. So you can see that in the form of that. Okay. We're sticking to markets right now. So we're going to look at the S&P. Bear with me. Any quick questions while I'm going through this? Yes, no, maybe? Okay. So let's take a look at a couple of things. We're going to start from the bottom. This is where's the S&P? Hold on. I thought I had the SPX here. Nope. Okay. So here's your SPX here. Daily. Very important. Doesn't matter what trade you're doing. Because these numbers, these things matter with with all the moving averages and dragging things down. So this is the start of So let's start from the bottom. What I've been noticing, we call it positive divergences. This was the low on, please look at the date right at the bottom, the 23rd. What day was the 23rd? 23rd was the 23rd, but the day was Friday. Not last Friday, the Friday prior to that. So on the 23rd, we hit the same level where we closed at today, even though we went below that during the day. Okay, and that level was, one second. And this is not hard, guys, so try to concentrate, because my brain works like a robot. I expect all of you guys to do that. Some people are more numbers orientated, some people are not, which is fine. That's why I draw a chart, so you don't have to be a numbers kind of always calculating numbers, okay? These are very mathematical markets. So on the 23rd, we hit a low of somewhere around, look on the right, 25.85. We closed the day at around 25.78. currently at 25.86. We're currently at 25.86. Whatever the case, this is what we call positive divergence. It's very simple. Same level. Look where the stows were. This is known as the full stochastics. This is the whole the formula for the full stochastics, the relative strength, blah, blah, blah. If you want the exact formula, how it's calculated, go to Investopedia, type in full stochastics, they'll show you. But it's giving you an idea of the buying pressure, the selling pressure, and all that stuff that's going on. Okay? Their overall relative strength in the market. The stochastics is a second derivative or second cousin of the relative strength. Relative strength is just what it says. Relative strength. You want the exact definitions? Go to Investopedia. I'm not here to teach kindergarten technical terms. Okay, so look what happened. We get down to the same levels here back at the 9th of February, which after the next day's massive intraday reversal, we went berserk. Again, there was overall zero retail trader participation. You could have made a fortune and just retired for the year and said, I'm not going to trade for the year. Seriously. All right. Or trade with bits and pieces of your profits. This is where we were. We came down to the same level. We came down to the same level back on the 23rd, which was not last Friday, the previous Friday. We hit that same level. Good. Now, we went well below that today. Look where the stows are. You don't need to look at numbers. You can see that it was a higher low. Just the way here, we basically broke down. And if anyone doesn't understand this basic concept, feel free to ask me. I'll love to explain to you, because if you don't understand this basic concept, you're in trouble. Here, we hit the low. Sorry. Here, we hit the low. We went lower. We made a higher low. We made lower. We made a higher low than here. That's known as a positive divergence. Happens in stocks all the time. Same thing is going on here. Back on the 23rd, we hit this low on the full stochastics. Today we went far below that. We made a higher low. And the interesting part is, which I'm watching really carefully, these lines look like they want to kiss each other and turn and go up a little bit, just the way it does here. That normally takes about 24 hours before the crossover happens. Will it be a crossover this time? In my modeling, it's a high probability event. So and remember, you don't have to shove all your pennies, all your dollars into that. So it's exactly going to happen. I don't know if exactly it's going to happen, but it's a high probability event. So at least have some position. And if this crossover happens right there, ladies and gentlemen, right there. If this crossover happens, it is a positive divergence already. A higher low with a lower price engagement. Just like here. It's going to be fast. The fast means you're going to hit that 2650, 2674 level. You'll be like, whoa, could have, should have. Oh my God, if you should have bought a little bit, we should have listened to this guy, Doesn't matter whether you listen to me or not. Just listen to yourself. So that's a positive divergence that's currently showing up on the daily charts. Now, there is also a positive divergence that's happening on the McClellan oscillator, which I find to be, and this is all technical stuff because that's what I do in between all the fundamental stuff that I explained to you guys. We hit a low of around minus 200. Minus 200 means you got to buy with hands down. Just the way it goes. And it paid off big time. Okay? Then we sold off again. That was on the 27th. What day was the 27th? The 27th was a Tuesday. Last Tuesday. We sold off hard. Guess what happened? The McClellan oscillator kept on going higher, just the way the full stochastic kept on going higher. What does that mean in simple English? That some real smart money, there's a lot of, not a lot, but few big time smart money, they're buying. They're buying your panic sells. Keeps on going higher. This keeps on going higher. Interesting. And guess what happens? Bang! We get that Friday move up. That was 440 points, by the way, mind you. Okay? And more from the bottom the previous day. This kept on going higher. Now it's pulled back. Here is the interesting part. We hit a low here at that 2581 level. We hit that today too. We made a higher low on the McClellan oscillator. That is a positive divergence. Is that clear to everyone who's here? Please. JB, is that clear to you? Because you know I talk about positive divergence and stuff a lot. I want, you know, I know you got it, but it's, did you understand what I just said? Yes, no? JB, can you hear me? Or you fell asleep? All right, fine. I don't waste my time. So here you got a minus 350 when it was here. We got a lower number back. This is in February. A lower, much lower print on the price. It was a higher low. We are back at that same level of February. And guess what? We are much higher than we were at here. That's a huge positive divergence. So I don't care what these guys are saying on CNBC or whatever. I'm just simply following my charts. Dan, are you with me so far?
Yeah, I got you.
Sounds good. Mike, did you get it? Yes? Okay. JB probably, JB, you still there? JB has a low attention span, so maybe he's, you know, he's somewhere else. Doesn't matter. So this is very interesting what I'm seeing. All right, on that front, and that's really what I want to talk about tonight, because I don't want to keep on talking about the same things over and over again. But there's going to, you know, there's going to be heavy volatility. I believe we're going to end higher towards the 2660 level, which is roughly about 100 points from where we closed at. And in the meantime, somebody just texted me, no webinar. What are these people? So I just want, you know, just stay flexible. If things break down below the 2531 level, guys, we're in deep trouble. Deep trouble. We're going to go heavy short. Sell everything, go short. That's my opinion. Okay? If we convincingly break the 2531 level. But so far, this is what's going on. I've showed you the positive divergences that's taking place. A possible crossover of the stows that is kind of hidden, about to happen or not happen. I don't know, but it's certainly looking good. McClellan oscillator is making a higher low for the same levels that we were at back in February. We were all the way down here. We are up here. Does that tell you something? It's known as a positive divergence. It tells you a lot. Lots of panic selling, but the internals are pushing forward, which means that within the next 24 to 72 hours, if not 48 hours, you get a sharp reflex bounce. And that's it, guys. So I'll see you guys tomorrow. Hope, you know, stuff that I talked about and explained. This is where we are right now on the futures. Crossing over this line here. And most importantly, you also have to go with your gut feeling. You see my levels break. You have a gut feeling things are going to be down. Act on it. No one can mimic somebody else's exact trading style, trading positions. But you have to develop your own style. Use me as some very precision tools, my charts, to act on it. And then, of course, as you wish, buy my selective alerts and make money as those bounces come and things move forward. On that note, have a great evening. Thank you for attending. The session will be uploaded, and I'll see you guys tomorrow morning. Futures are up roughly about 12 points. I don't trust anything. We'll probably be down 20 by the time markets open, but at least you know what the roadmap is. But so far, those positive divergences, I repeat, in my opinion, will play out within the next 24 to 72 hours. Have a great evening. God bless you all.